Greeting Algo artisans, we have a strategy here that could make you $8,000 in 2 weeks. How is that even possible? We're going to show you right now. Okay, so we're going to start with the Bitcoin 5-minute chart. This can be done on any time frame with any asset. You just have to test it to know whether or not this can work for you. Now, this strategy is based on a very common simple moving averages cross strategy. It's one of the most basic strategies out there, but what I've done is I have filtered out some of the less valuable trades. So let's start with the moving average strategy and how to set that up. We're going to go up to our indicators right here at the top of the screen. We're going to click on that. We're going to type in moving average simple. There it is. I'm going to click on it twice. What that means is I'm going to put it on the screen twice, and you can see this blue line right here that is moving through the price action, right? So if I click on it, I double click, I'm going to change the length to 20, and I'm going to change the style to yellow, so it's just easier to see, okay? And then the blue one is the one that was left, and I'm going to change this style to light blue, and I'm going to change the input to 50. So now we're looking at a 50 period and a 20 period moving average. The way that the typical simple moving average strategy works is that you look for the moving averages to cross. And if the yellow, in this case, the faster average crosses below the slower average, then you're looking to go short. And then you can choose whatever method you use to create a stop loss and you enter the trade. So in this case, let's go ahead and take a look at what this looks like. You have the moving average cross right here. Okay. So the candle after that, I'm going to look to enter the trade right here. Now, because the yellow crossed below the blue, the faster average crossed below the slower, the 20 crossed below the 50, that means I'm going to look to go short. So here is the entry for the trade. I'll enter on the next candle market. I'll put a stop loss above structure, and you could have it say be 1-to-1, and that'd be a winning trade in this case. So the stop loss method is actually one of the items that we're going to talk about, but in the meantime, I want to show you a couple things as to why I want to filter some bad trades out. So let's look at a time where price is consolidating and you have a lot of flips but not a lot of trades. Here's a perfect time. Now you can see how the moving average crosses over several times right about here, but there are not really a lot of good trades. You're not getting any wins. In fact, you're stopping out. I'd venture to guess every time it crosses. Once, twice, 3 times, 4 times. Those are all losing trades. I could tell you just based on seeing it right on the chart. The price doesn't go very far and it goes back into where your stop loss is probably going to be. So how do we filter these little bad trades in the low volatility time? How do we get rid of those? It's easy. What we can do is we can look for a volatility indicator. We can find an indicator that gives us a clue as to when volatility is rising. The one I use is called average directional index. So let's take a moment and list out the indicators that we're using so far. You have the 20 period SMA, that's the simple moving average, and then you have the 50 period SMA, and now we're using the ADX, which is the average directional index. So far, that's what we're using, okay? Now, I'm going to take this average directional index and I'm going to manipulate it just a little bit. First thing I'm going to do is I'm going to color it yellow to make it easier to see. Next, what I'm going to do is make this more powerful. Now, when this is on the 5-minute chart, it's based on 5-minute candles, and that's a very fast ADX. We need it to be slower and more powerful. We want it to look at volatility on a higher time frame. So the way I'm going to do that is I'm going to open this up, double click on it. I'm going to go to inputs. I'm going to change the time frame. For example, it says chart right now. That means it's on the 5-minute because we're on the 5-minute chart. I'm going to move this up to 30 minutes. Now you can test this on different time frames, but if you go up, if you go to a longer time frame, you're going to find that the ADX is going to be more useful. So let's talk about how we make this useful. First thing I'm going to do is I'm going to get a horizontal line and I'm going to put it at 20 on the ADX. And I'm going to double click on it to make sure it's exactly 20 by typing that into the coordinates. So the rule is with this is that whenever the ADX crosses above 20, that means it's time to enter the trade. How do we know what to do with the trade? Well, first I'm going to mark out some examples of when this crosses using a vertical line. For example, right here, okay, that vertical line is a good cross. Right here is a good cross. And I'm putting them a little after the cross because we need at least one candle to close, right? So it's not directly on the cross, it's the candle after. Now, as we're doing this, we do have an idea of what the future looks like. And when you have an ADX cross where it kind of it crosses and then it goes back down, that tends to mean that it's not a good trade. However, we don't know that that's happening at the time. So we're going to mark every single time that this thing crosses up. We're not going to try to be too picky because we're not going to have that option trading in real life. So let's give ourselves a little bit of a back test. We're going to go through just a few examples on here. Now that I've marked these out, I'm going to go ahead and get rid of the ADX because I don't need to see this anymore. I have it marked out on my chart. When you're actually trading, that's not the case. You will have to have the ADX on the chart unless you develop an algorithm that tells you the data without having to see it, and that's a whole different video. Okay, so let's go ahead and move forward and we'll do some tests. Now I haven't explained to you how to enter these yet. We haven't gotten there. Okay, so what we're going to do is we're going to enter on this candle, and in this case we're going to go long. Why is that? Why do we want to go long instead of short? Well, because the ADX crossed and the 20 is above the 50. So you can see there on the screen the yellow line is above the blue line right there. There's your yellow, there's your blue. So because the yellow is above the blue, we go long. If the yellow were below the blue, we would go short. Now, how do we set a stop loss? There are many ways that I teach to do that. There's using structure is probably the most common way. I will tell Algo Factory in the private live lab is how I'm setting my stops. But in this case, we're just going to use structure, okay? So we're going to enter the trade here. The bottom of the blue is where I'm going to exit the trade if it goes against me. We'll use some decent structure right here. And the top of the green is where I will go out. And we'll use a 1-to-1. Now this trade barely stopped out. It didn't make it. It almost won. But in this case, it's a stop out. We did not win that trade. So let's go to another example. Okay, our next example is right here. And this is going to be a long trade. So I'm going to enter on the candle because this line is one candle after the ADX cross. So we can do that. And then I'm going to use some structure as my stop loss down here. And we're going to go with a 1-to-1 risk to reward ratio. Now, ideally, we're getting 2-to-1, 3-to-1. We want to try to pull more money out than we put in. But for now, this is just a test. So we're just going to show you an example of how this works. Now, that's a one trade right there. We won that trade. And as a matter of fact, if you had had a better risk to reward, you probably could have pulled the 1.5-to-1. You can see price continued up, but let's move on to some more examples. This would be a massive win. This trade right here would be a killer trade. And this is why you want to consider having a better risk to reward ratio, because yes, you may lose some trades, but these big ones can make up for it. As a 1-to-1, if we're going to do 1-to-1, then we have to do a 1-to-1, meaning that the risk to reward ratio is just as much win as you would have if you lost, right? But this could be like an 8-to-1 or 10-to-1 just because the structure is so tight. I mean, I used structure back here. I didn't even use the recent structure. I went back a little further. I was a little bit conservative. Now here is a short trade. We can see that here is our ADX cross. We have the yellow 20 below the blue 50. How is this going to pan out? Well, we enter on the next candle. Structure close by is actually right here. If we're going to put our stop above that a bit, then a 1-to-1 is going to be here, and that's a win. In fact, a 2-to-1 might even win on this, because if you look at the way that price goes in the future, then that's a win as well. But we have to do it the same way every time in a test. It's always got to be a 1-to-1. Now, if you have a different criteria for risk to reward ratio, where you can develop rules that allow you to sometimes take a deeper risk to reward, if you have ways of changing that works in a rule kind of sense that you can apply to every single trade, then you can do that, right? But we're just keeping this simple. One more test, and then we're going to go to show you where I made a strategy where I got that $8,000 number. Here is one that doesn't win. This is a 1-to-1, and price just simply dips up and out. So this is how we do this, right? And again, the piece that I'm not showing is how to create a stop loss and to decide risk to reward. Okay, so let's move over to the $8,000 strategy. Now, first of all, this strategy is based on having a $500 risk. That means that if I lose the trade, I lose $500. And if I win the trade, that's a different story, because my risk to reward ratio, if you look at the chart and you see all that noise, the purple and pink right there, that is my stop loss methodology. I'm not talking about what that is right here, but I will tell Algo Factory. Okay, so here it is. You can see I have the ADX below, and I'm going to go ahead and take that off the screen. And if you'll notice, my risk to reward oftentimes is way better than 1-to-1, right? For example, this trade right here, you can see that it's a 1.5-to-1. This one here is a 4.6-to-1. This one here is a 3.3-to-1. Okay, so you can see this one here is a 3.5-to-1. That's where these numbers are coming from, right? So if you have the proper strategy and you have a good risk to reward ratio, then you can afford to lose a lot of trades because your wins are going to make up for it. So in this case, if we go back, we have the first two trades are a loss. loss at 500 and 500. And then we have a win at 1500 right here. So let me zoom in. So you can see these boxes. Now the risk to reward is a 3-to-1 on this, right? But I lost it. So I lost 500. Same here. This is almost a 2-to-1. I lost it. But this one is a 3-to-1, just a little over. And so I made $1,500. Even though I lost these first two trades, this one makes up for it and gives me an additional 515. So the next trades that we see, this one's a 4-to-1. I showed you these already, but you can see that, of course, they're very lopsided, very asymmetrical. It's just what you want. Okay, so you can see a couple losses here at the end, right? You can see that it all adds up to about $8,000. This is on the 5-minute chart, but the ADX is on the 30-minute chart. So this is why it's selecting much better trades, much better risk to reward, rather than using the simple EMA. I do hope this video was helpful. If you want to learn more, if you want to get the missing piece of the recipe, come on over to algofactory.tech. We help people learn how to build trading algorithms. We help them build trading strategies that enable them to extract money out of the market. In fact, we have a couple of traders who are either trading, close to trading, many of them actually making profit as we speak. In fact, let's hear from one of them right now.
This is Think Free's Algo Factory testimonial. I began my prescription for Algo Factory the summer of 2023. I am now 70 years old and I have set a goal to have a supplementary income by learning to trade. I have been putting in about 3 to 4 hours per week of study time. In spite of this small time of commitment, I am determined to learn to trade. I set a goal of slow, steady progress in my learning. It is now March of 2024, and I have been delighted that through the articulate speech and hands-on help and support from Cowboy, I have developed an algo that looks very promising. I've come to appreciate Cowboy's remarkable ability to communicate and teach. He's not just knowledgeable, but also very creative in his shoot-from-the-hips approach. I wonder, is that where the name Cowboy came from? I have followed the Algo Cowboy and V the Guerrilla Economist for more than 3 years and have found them to be very respectful, caring, and firmly rooted in reality. By that I mean they have a clear, deep, no-nonsense understanding of the world we live in, not just in trading and economics, but geopolitically and, dare I say, spiritually as well. For me, this fact makes working with them all the more gratifying and secure. This has and continues to be a great investment of my time and money. Also ends up being fun with the humor that is shared amongst our Algo Factory group members. Thank you, Cowboy.
Okay, well, thanks for listening to that. So come on over, algofactory.tech. Don't forget, trade your job, upgrade your life. We'll see you on the next one.